The market will always test the strength of your mind long before it rewards the size of your account. Every man who ever placed a trade thinks he can outsmart the market until the market proves otherwise. You can study all the charts, indicators, and patterns in the world, but until you conquer yourself, you'll keep donating your money to those who already have. I learned this truth not from books, but from blood, my own blood spilled in the pit of speculation. The lessons cost me fortunes, and I paid them gladly, because they taught me what really destroys most traders. It's not lack of knowledge or bad strategy, it's three psychological traps that almost no one escapes. The first trap is greed disguised as ambition. Most traders don't realize how subtle it creeps in. Greed doesn't announce itself with a loud voice. It whispers. It tells you to hold a little longer, to add just one more contract, to double your position because this one feels different. I remember a trade in cotton, everything lined up perfectly. The price moved in my favor, and instead of taking the profit when the market offered it, I held out for a little more. A little more, that's the poison. The market turned, my paper profits vanished, and I was left staring at a loss that grew heavier by the hour. That's when I learned something I never forgot. There's no top limit to greed, and the market knows it. It feeds your desire, then snatches the plate away just when you reach for more. Greed turns a trader into a gambler, and gamblers always lose in the end. The disciplined trader doesn't ask, how much can I make, but rather, how much can I lose and still stay in the game? The market doesn't pay men who need to win every time. It pays those who can take a series of small wins and small losses without losing their nerve. The cure for greed is humility. Every time you enter a trade, you must remind yourself that you are not owed a profit. The market doesn't care about your plans, your hopes, or your past results. The only thing you control is your exit, and greed will always tempt you to delay it. Learn to take your profit when your plan says so, not when your emotions beg for more. The second trap is fear, the twin brother of greed. It hides behind caution, pretending to protect you, but in truth, it paralyzes you. I've seen traders sit frozen while opportunity knocked again and again, afraid to act because of a loss they took last week or last month. Fear makes you see ghosts where there are none. A normal pullback looks like the end of the world. A losing trade looks like the end of your career. I once watched a market rise while I stood aside, too shaken from a previous loss to take the next clear signal. By the time I gathered the courage, the move was nearly over. Fear had robbed me not just of money, but of confidence. The market punishes fear just as harshly as greed. Both stem from the same root, the inability to accept uncertainty. Every trade you place is a test of faith, not in luck, but in your system, your discipline, your preparation. Fear whispers that maybe you're wrong, maybe the market knows something you don't. And sometimes it's right. But trading is not about being right all the time. It's about managing being wrong. The way to silence fear is through structure. Every trade must have a defined risk before you ever enter. Once that's set, you stop worrying about what could happen. You've already accepted the outcome. Fear loses its power when it meets preparation. But the third trap, the most dangerous one, is overconfidence. It's the silent killer of great traders. It creeps in after success, when your judgment starts to sound like prophecy. You string together a few winning months, maybe even double your account, and suddenly you believe you've mastered the market. That's the precise moment the market teaches you humility. I've been there more than once. After a string of big wins, I started increasing my position sizes, taking trades outside my rules, convinced that I could read the tape better than anyone. I thought I was invincible. Within weeks, I gave back nearly everything I made. It felt as though the market waited for me to get cocky just so it could remind me who was boss. Overconfidence blinds you to risk. It makes you believe that the laws of probability no longer apply to you. You start ignoring your stops, moving them wider because you know the price will come back. You start breaking your own rules, telling yourself it's just this once. But the market doesn't forgive arrogance. It thrives on it. Every dollar lost through overconfidence ends up in the pockets of traders who stayed humble, patient, and disciplined. The best traders are not the ones who celebrate their wins. They're the ones who quietly prepare for the next storm even while the sun is still shining. These three traps, greed, fear, and overconfidence, are not just emotions. They're diseases of the trading mind. You can't eliminate them completely, but you can manage them. You can train yourself to recognize their voice before they take control. The secret is emotional discipline. That's the real edge in trading, not your indicator, not your chart pattern, not your strategy. Emotional discipline is what separates the professionals from the amateurs. The amateurs react, the professionals anticipate. When I was younger, I used to think success in the market came from finding the perfect method, the secret formula that others didn't know. But after decades of trading, I learned the truth. Everyone eventually finds a system that works. The difference lies in who can follow it without deviation. Most traders lose not because their system fails, but because they fail their system. They abandon it the moment emotion enters the picture. When they win, they overtrade. When they lose, they revenge trade. The market becomes a mirror reflecting their inner instability. Trading is a lonely profession. You don't compete against others, you compete against yourself. The ticker tape doesn't care how badly you need to be right or how much you hate losing. The market is the most efficient psychologist in the world. It will expose every weakness in your character until you either fix it or go broke. That's why I say trading success is 90% mental. Your job is not to predict what the market will do. It's to manage yourself while the market does what it does. Let me tell you something most traders never accept. Your biggest losses will come right after your biggest wins. Why? Because victory breeds complacency. When you're losing, you're alert, cautious, disciplined. But after a string of wins, you start relaxing the very habits that brought you success. You start thinking, I can't lose now. And that's when you do. The market senses arrogance the way a shark senses blood. The moment you stop respecting risk, it comes for you. So how do you avoid these traps? The first rule is to build a plan and obey it religiously. Every trade must have an entry, a target, and a stop before you even click buy or sell. Then, once you're in, you follow the plan like a machine. You can't let emotion rewrite your rules mid-trade. The plan protects you from yourself. When greed says, hold a little longer, your plan says, exit now. When fear says, don't take the next setup, your plan says, follow the system. Discipline is your only weapon against the market's emotional games. The second rule is to think in terms of probabilities, not certainties. Every trade is just one in a long series. No single trade should make or break you. Once you start thinking like that, you detach from individual outcomes. A loss doesn't hurt your ego, it's just part of the math. You start to see the market like a casino owner sees gamblers. He doesn't care who wins tonight. He knows the house always wins over time because he plays with odds, not emotions. You must become the house. The third rule is to guard your confidence like a fragile treasure. Confidence is vital, but it must be grounded in respect for the market. The moment you stop respecting it, you invite ruin. Every time you think you've mastered the market, remind yourself, it can change tomorrow. No method works forever. The market evolves, and so must you. Stay a student. Stay humble. The greatest traders I ever knew were not those who made the most money. They were those who lasted the longest. There were times I walked out of my office with millions in profit, only to return weeks later with the same account bleeding red. I didn't lose to the market, I lost to myself. It wasn't the ticker that beat me. It was my refusal to obey my own rules. Once I finally understood that, I began trading less and thinking more. Fewer trades, bigger patience, tighter discipline. That's how real fortunes are made, not by chasing every opportunity, but by waiting for the few that align perfectly with your plan. Remember, the market is designed to fool the majority. If 99% of traders lose, it's not because the market is unfair, it's because human nature is predictable. Most people are driven by the same emotional impulses: greed when they're making money, fear when they're losing, and arrogance when they think they've figured it out. To succeed, you must do the opposite. Be fearful when others are greedy, and calm when others are fearful. Most importantly, be humble when others grow overconfident. Discipline isn't glamorous. It's not exciting. It's repetition, patience, and the quiet execution of a plan. It's cutting losses quickly, taking profits rationally, and walking away when the setup isn't there. The public wants excitement, but excitement is expensive. The professionals seek boredom because boredom means control. Every trade you take should be boring. The excitement should come from watching your discipline pay off over time. One of the hardest lessons to accept is that missing a trade is better than forcing one. The need to always be in the market is just another form of greed. Sometimes the best trade is no trade. You must learn to wait like a hunter in the shadows, patient and ready, but never desperate. The market will always be there tomorrow. Opportunities are endless, but capital is not. If you truly want to survive in this business, tattoo these 3 truths into your mind. Control your greed, master your fear, and never let success turn into arrogance. Do that, and you'll already be ahead of 99% of traders. The market rewards patience and punishes impulse. It rewards discipline and destroys emotion. There will come a day when you'll look at a losing trade and feel nothing, no panic, no anger, just calm acceptance. That's when you'll know you've crossed over from amateur to professional. When the market can no longer manipulate your emotions, it loses its power over you. Then you're not just trading stocks, you're trading psychology. In the end, trading is not about money, it's about character. Money is just the scoreboard. The real game is internal. If you can conquer your own impulses, if you can silence the greed, fear, and pride within, the market will reward you beyond measure. But if you let those emotions rule you, it doesn't matter how much you know, you'll always end up among the 99%. The market is a teacher that never stops testing. Most students fail because they refuse to learn the real subject, themselves. Don't become one of them. Study your mind more than your charts. Respect risk more than you respect opportunity. And always remember, your biggest enemy isn't the market. It's the man you see in the mirror before the opening bell.